heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow, he's off. This is Bloomberg Technology. Coming up, Paramount and Skydance reach a merger agreement after collapsing last month. Full coverage ahead. Plus, Apple and OpenAI deepen their relationship as the iPhone maker gets an observer on the company's board. And we'll turn to the intersection of health and technology as we sit down with the CEO of Sanofi. But first, quick check on these markets, because even without the play of NVIDIA, we're managing to break new records. We're currently up 0.3% on the Nasdaq, up 59 points. You're looking at the 10-year yield screeching down some 9 basis points. Why? Well, the bad news is good news. The economy is showing some signs of slowing when it comes to services, and indeed on those jobless claims, we fall some 9 basis points as maybe the Fed can indeed start to cut for the rest of the year. The Stock 600 actually in Europe doing well, 0.7% higher. Of course, the day before the UK heads to the polls, the FTSE, one of the only benchmarks that's seeing any sort of volume on the day. Let's move on and have a look at what's happening on the individual assets of choice. I'm looking at crypto, Bitcoin under pressure by 2.8%, 60,156. The line to look at, 59,735. What is that, you say? 183 daily moving average. Basically, that is when we start to see more bearish signals from the rest of the year if we break below that. Move on to the individual stocks of choice. And look, there's a lot to be keeping an eye on. Tesla, once again, on the higher side, up more than 5%, erasing this year's losses as we get deliveries that were better than expected, but still falling. Amazon off by 1.5%. Bezos, he's selling shares as we reached that record high yesterday. And Paramount, we're going to dig into this deal. Is there one? Can it last? Will Skydance finally manage to buy out Sherry Redstone? We're up 7%. But we've got some key political news for you. And before we get to all of the markets who want to really understand what's heading out of Washington, the New York Times, of course, has been reporting that President Biden has indeed told an ally that, well, he's wondering whether to continue running for president. Joining us for more is the host of Bloomberg's Wall Street Week, David Weston, intimately understanding of the functioning of the White House and politics. And this does seem to be the first time we've heard from Biden's team, at least, that there's questions.
Well, there's a New York Times report that a close ally said that, as you say, Carolyn, at the same time, we now have the White House itself, a spokesperson coming out and saying the president is not considering withdrawing from the race at all. But the report was actually a little more nuanced, I believe, which is he knows that he's in trouble and he's going to have to do something to turn it around, was more the gist of the report, again, attributed to this close ally. And that shouldn't come as a big surprise. I mean, that the president understands there's a problem. In fact, there were some Democrats who were starting to say, does he not get it? There's a problem. So now they're coming out and saying, yes, I get it, there's a problem. The question is, what can he do to turn this perception around after that really unfortunate for him debate?
Katie Rogers doing the reporting over at the New York Times, and she articulates that there's a lot that we can hear from the president in the next few days. He has decided to go back out on the trail in a significant way and do other key interviews to try and prove that he's ready, willing, and able.
Exactly right, Caroline. I think that's the key thing, is the interviews. It's one thing to go out and give a scripted speech to a rally. I'm not sure that they believe that that will really turn things around. But he has agreed to do a sit-down interview with my old shop, ABC News, and George Stephanopoulos, a close friend and colleague, to sit down. And I believe, I'm speculating now, that they decided we really need to go out and prove credibly that this person is up to the job at this point. And they chose George, I believe, at least on prejudice, because they thought he will be a tough interview and he'll put him through his paces. And then they can assess, can the president dig himself out of this hole by a performance with someone like George Stephanopoulos in a one-on-one extended interview?
That last line of the story, clear-eyed, they said that he has an uphill battle to convince voters, donors, and indeed political class. We thank you for bringing us your inside knowledge when it comes to ABC and indeed what's happening when it comes to debates in politics. David Weston there, we thank him. Look, markets, they are going to be affected by the presidential election. They're going to be affected by worldwide elections, in fact. Let's bring in Melissa Otto, head of TMT research at Visible Alpha. Look, we want to talk to you, Melissa, about whether you should be going long NVIDIA in this market, whether we should be getting more into this chip stocks, but just more macro perspective. Are you thinking about the presidential election? How does it affect your research?
Yeah, I would say that markets are terrible at discounting political risk in general. Ultimately, I think fundamentals are what drive stocks, and that tends to be what we're focused on.
It is notable that many feel, whether it's a Biden, or if he's in Biden, whether it's a Democratic or Republican president in the White House, they will focus in on technology. They will continue to invest. And it has all been about supply chains of late. Just tell us a little bit about, well, where you've been looking from a chip perspective, how much you've been factoring in geopolitics to NVIDIA's ability to sell into China, for example.
Yeah, I would say it's a very interesting time right now for the broad AI landscape. I think the million-dollar question that we're very focused on at the moment is what is ultimately going to drive broad adoption? What's going to get users around the world really fired up about generative AI, its capabilities, its ability to summarize, to save time, to make people more productive? And so there's two angles to this. One is a consumer angle, and one is an enterprise angle.
Yeah.
And it could be a hybrid of both. And I think this is the broad landscape that we're looking at.
I think what's interesting is that what could really infuse our own use case is, of course, Apple, the partnership with OpenAI. We're going to be debating that later in the show as to that board presence or board observation that Apple now has with OpenAI. But to your point, where is the infrastructure investment still needed? Look, people are amazed that today we're still breaking new records, even though NVIDIA is trading to the downside. Have we seen all the value already accreted into these prices right now when it comes to the infrastructure, the picks and the shovels, or more to go?
It's hard to say. I mean, based on the analysis that we've done, their expectations have come up significantly since December. We've seen in our estimates revisions of in the ballpark of $200 billion since last year. So, I think we thought it looked a bit long in the tooth last December, but it continued to estimates continued to rise yet another $50 to $75 billion into this year. So it's really hard to say. However, if we take a step back and think about where we are in a hardware replacement cycle and what role AI may play in this could be a very interesting place to look, and where expectations have remained fairly muted for the moment. And it'll be interesting to see if that changes over the next 6 to 18 months. We'll be watching very carefully.
What are the stumbling blocks with that? I mean, Melissa, many talk to ultimately an issue with energy, but where can one be putting money to work that perhaps has been overlooked of late with that replacement cycle, with the need to refresh, with the need to invest?
Yeah, the hardware cycle went bonkers in the COVID era. I think consumers, enterprises just rushing to get the latest laptops, smartphones to really equip people to be more connected, more mobile, and to be able to work without having to worry about going into the office. And so that was an enormous catalyst for driving that replacement cycle. Now, a normal replacement cycle is normally around 3 to 5 years. And, given that COVID started in 2020, we're squarely in that, area. So I think, as we look out over the next year or so, it'll be interesting to see how companies start to think about spending and where they want to upgrade. Now, we've had a couple of compelling announcements by Microsoft and other laptop manufacturers, showcasing their new AI laptops. Now, are these new AI laptops potentially going to get enterprises excited about the capabilities of generative AI to make their employees more empowered, more productive in a way that could really hit their bottom lines and ultimately drive that replacement cycle more than expectations? Current expectations are right around 15 to 20% below where the peak COVID units were. So what could potentially drive it to see some upside?
Well, Best Buy certainly investing in their talent pool to be able to help sell those AI PCs. Melissa Otto, we thank you so much. Head of TMT Research at Visible Alpha, all things markets and focus there. Coming up, we've got to get into the deal, Paramount's deal with Skydance. It's been revived. We'll have all the details next. This is Bloomberg Technology. Shares of Paramount absolutely popping today. Once again, speculation is rife. Have we got a deal between the company and the independent film and TV producer Skydance Media? They've been revived, looking to buy out Sherry Redstone, of course, her particular controlling stake. And the deal reports continue to drive shares higher and indeed, well, analysts trying to understand whether this is in any way longer-term good fundamentals for Paramount. National Amusements, of course, and Skydance re-engaging in those talks. Laura Martin, the senior entertainment and internet analyst at Needham & Co., has been following this saga that will eventually be a movie for the last 7 months. And Laura, I mean, we get hints from the Wall Street Journal that of a price point of $1.75 billion for the National Amusement stake. Is that enough? And what does it mean for the non-voting shareholders?
Right. So the rumors is that the non-voting shareholders in the second step would get half of their shares taken out at $15 a share, which is quite a bit higher than today's move, which means that Wall Street's skeptical this deal will go through too. Otherwise, I think that gap would be narrower. So I think that Skydance, look, two things changed in this deal compared to the deal Sherry walked away from a couple of weeks ago. One is it doesn't require the approval of the independent committee, but instead what she got was a 45-day shopping period. So in litigation, because she's going to get sued over this because she's getting better terms than public shareholders, that when they get to court, where the public shareholders are suing her for taking a sweetheart deal from Skydance, she can say, look, we shopped it for 45 days. No one else stepped in at this price point or more, and therefore we didn't screw you over, public shareholders.
So in that anticipation, the worry, the anxiety that Sherry Redstone has that she will be taken to court, what do you think that 45-day shopping experience will garner in any way? Laura, you just of the viewpoint that no one's going to step forward.
You know, I think most other companies would rather just buy Paramount and not give the money to National Amusements to her. But I don't expect him to go away because, as you say, this saga is like the boy who cried wolf. I mean, this deal's been on and off at least 4 times that I can think of. So if I was somebody else, I wouldn't stop trying to do deals. And you saw the Warner headline today that Warner is thinking of trying to put its streaming businesses together, specifically HBO Max with Paramount Plus, to try to create a bundle to combat the Disney bundle with Hulu. And so that's a smart idea. So other business is going to get done here, while the fight for the top of who actually controls the entity continues. And
potentially a sell-off of BET. We were expecting that, and senior management looking to take that over in some way, Laura. So there are different parts of the asset pile here. And yesterday we were all talking about the rumor that Barry Diller was eyeing it, of course, previously had run the Paramount movie part of the business. When you're looking at the share price and you're saying at the moment it doesn't go all the way to potentially $15 a share that the non-voting B class would get, what should they do? If I'm an investor, a significant investor in the Class B shares, what do I do at this moment?
So I would wait to see who's the president of the United States. Because so the problem right now, the Biden administration has really negative M&A people at the head of all these agencies. But if we get a presidential switch, this industry we're talking about right here all needs to consolidate. They all need to buy each other. There needs to be 3 competitors where they can rip out costs, and Disney needs to get bought by Apple. None of that consolidation can happen under the Biden administration. But if we get a flip in presidency, I would wait for that. And if the day that happens, I think there'll be massive consolidation in media over the next 4 years. Because the head of the DOJ will change, the head of the FTC will change, the head of the FCC will change to a Republican. And I think they'll be far more sympathetic to allowing the consolidation to occur to cut costs.
Laura, we love it because you bring the viewpoint. So who remains on top? Who eventually in 4 years' time, if we do indeed get a change in the White House, wins out? Who survives?
YouTube, #1 streamer, Amazon Prime, #2 streamer. I think the Disney empire, #3 streamer, although I think Apple should buy Disney. And I think these other ones, I think Peacock can't buy CBS, which Paramount owns, but Warner Brothers can. So maybe Paramount ultimately, if it doesn't go to Skydance, because I'm sort of skeptical after they're on and off all the time, then it should go in pieces to different people. I think if they waited to see what happened in the election, they might be able to get a better price. But I understand that Sherry wants to get this done. She's got a lot of debt due. It's unclear she can pay unless she gets this deal done.
Precisely. So she can't wait. We all look to what's happening in Sun Valley. Will a deal be announced this weekend, do you think? And ultimately, talk us through the next steps of your own research at this point.
Right. So, there's no Harvard Business School case ever that says a three-person committee is a better form of leadership than a single leader. And that's what we have at Paramount. We have a three-person committee. So really, there's no management. Like, there's no government. So it needs to go. And they've just destroyed like 70% of the value. Oh, well. And then if Trump gets in and everybody's consolidating, it just took the worst possible price because it had to at Paramount. But then I think we get a lot of consolidation over the next 4 years, and we end up at the end of if there's a Trump administration, we would end up with 3 competitors, maybe 4, including Apple and Amazon. Amazon and Comcast, Peacock, and Disney.
So at $11, do we buy?
At $11, no, I don't think you do. I think they've gone on and off with this deal too many times. So no, I don't think you buy it here.
Laura Martin, we love having you on the show. Thank you, Senior Entertainment and Internet Analyst over at Needham & Co. Wishing you a happy holiday for tomorrow. Meanwhile, coming up, we're joined by Arvind Jain, CEO of Glean. Look, we're going to be discussing the enterprise AI platform, their work that's helping companies build generative AI agents. This is Bloomberg Technology. Following the Supreme Court's decision to overturn that Chevron doctrine, lawmakers will now be forced to become more specific about how they regulate AI. Now, for at least the past 40 years, judges have deferred to administrative agencies to interpret vague laws written by Congress. But now, with the overturning of the Chevron doctrine, it raises the stakes for Congress to write legislation more efficiently, which could prove difficult in the field of artificial intelligence, with, of course, the rapid development and the volatility of the technology. I'm talking with the technology and how it's being adopted. It's time now for our weekly AI in Action segment. For more insight on basically how you, the enterprise, are adopting AI, I'm pleased to say we're joined by Glean CEO, Arvind Jain. And you're talking about, well, a new launch, your new platform, which is going to be helping companies build custom AI apps, maybe some AI agents. We have been talking about AI agents for months, Arvind, but there are still blockers as to really make them effective. How will you help businesses adopt it?
So Glean AI agents are connected with all of your enterprise knowledge. And think of them like humans that can actually use all of that knowledge to help you do your work.
Who do they work? Who have you been already working with to ensure that when they're looking at their Slack, when they're looking at their intercompany communication, the agents, the AI they bring to bear really works for them?
So Glean AI agents are actually used by almost all the people inside any enterprise. Think about engineers, support people, your salespeople. All of them have, different needs, that now AI is actually, very capable of helping them with, and like save a lot of time for them. So, for example, think about engineers. They're always like, wanting to sort of get help writing code, helping troubleshoot issues, and so Glean AI agents can actually help them sort of do, work on that much faster than they could before. Think about customer care agents, day in, day out. They are looking for like how to resolve questions that the customers ask, and Glean AI assistant will actually help them answer those questions for them.
I believe you've got over 200 customers. We're talking Databricks, Canva, Bill. But why would a company choose Glean over, I don't know, ChatGPT Enterprise or Microsoft's offering?
So Glean has some of the world's leading enterprise companies, many companies in the global 2000 that use to Glean and bring the product to all of their customers. Some of the key reasons why Glean works better than Microsoft Copilot or ChatGPT is Glean actually comes with deep integrations built into all of your enterprise systems like Slack or Salesforce or Google Drive or Microsoft systems. Like if you think about any large enterprise, they have knowledge that that's spread across many of these different systems. And and actually to make AI work on all of that knowledge and do useful things for you, you have to first go and connect with those systems and do it in a secure and safe way. And that's where, that Glean comes really handy, with our deep enterprise integrations.
Okay, so you've got the integrations. Maybe that could be replicated by others. But I'm interested is what perhaps they can't replicate over at Microsoft is, well, using other large language models. They're fully embedded with OpenAI, whereas you're kind of more agnostic. You've got OpenAI, you've got Anthropic. Why go that route?
Well, like you said, all of these models, there's so much competition in the market, and you will see, each model having some, unique strength. And, as a customer, you want to make sure that, you have access to the best of all the models that are out there. And that's what Glean actually helps you do. We work with all the different AI models, and depending on your use case, your environment, there's a particular model that, suits your needs the most, and we'll actually use that model for you and give you that flexibility.
Great to have some time with you. Thank you for coming to us live from India today, Glean CEO Arvind Jain. Stay well. Meanwhile, it's time now for Talking Tech. And first up, Keyword Studios has agreed to a $2.5 billion offer from investment firm EQT. Investors will get about $26.40 per share in a cash down from an earlier offer of $27.50. That's because Keywords worked on popular titles such as Fortnite and Call of Duty, but accepted the lower price after the gaming services industry was hit with delays and cancelled orders. Now, Jim Ratcliffe's Ineos Group is delaying its electric SUV. Production of the vehicle was expected to begin in 2027, but the company has now put the car on the back burner, citing waning consumer demand for EVs and uncertainty around tariffs. No new timeline for production was specified. And shares of SoftBank rising to an all-time high. Look, the rally has been indicating a vote of confidence in CEO Masayoshi Son as he's really been ramping up investments in artificial intelligence and semiconductors. SoftBank also getting a lift with the help from the Nikkei 225's recovery. Of course, it's expected to help boost the firm's earnings. Coming up, we look at Apple, the new observer role on the OpenAI board, a position that will deepen the relationship between the iPhone maker and that of OpenAI. From New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Quick check on these markets because a lot of political anxiety here in the United States, but more broadly, we're focused on the macro data, the fact that we've got perhaps some slowing services data and indeed a little bit of cooling going on in the labor market. All eyes on non-farm payrolls later this week. Nasdaq 100 up 0.5%. Can the Fed cut into a scenario where services is cooling? That is currently the bet on Wall Street. I'm looking at 10-year yield crushing down some 8 basis points on the back of some of that data. But interestingly, we're looking at what's happening in Europe. We close out the day on the higher side on the Stock 600 and indeed on the FTSE 100, up 0.6%. That says, of course, the UK population head to the polls. Come tomorrow, we're up 0.6% because largely miners, international companies doing well. Move on, have a look at some of the individual movers that I'm seeing. And look, 4% higher for Tesla. Let's call it 5%. Let's call it most of the losses of 2024 erased so far with Tesla. All eyes on the robo-taxi event, August the 8th. All eyes on the fact that actually deliveries came out better than expected, even if we did slow quarter and quarter, year on year. I'm looking at NVIDIA down, well, up 2.7%. NVIDIA now back on top. It was lower, and there was much being said about the fact that the S&P 500 yesterday reached a new record high. So did the Nasdaq, even with NVIDIA not playing. Today we go long again. We're up at $125 for the chip maker. And of course, what's happening with Apple? Trading flat on the day. We had actually seen it up about 0.5% in earlier trade, much being made really on what's happening with Apple and its AI play, Apple Intelligence, and indeed OpenAI, the relationship there. We understand it secured an observer role on OpenAI's board as part of an agreement announced last month. Who had the scoop? Of course, there was our own Mark Gurman. And so is this impactful to almost be neck and neck with Microsoft here with an observer position on the board?
Thank you so much for having me. Yeah, having an observer position on the OpenAI board means this partnership between Apple and OpenAI is a little bit tighter than we had anticipated, right? This seemed like a simple integration of ChatGPT into Apple Intelligence. Obviously, they're the first partner here. By having a board observer role, Apple gets more insight into the decision making at the company. And this is something that probably came in response to all the controversy that was facing OpenAI in the months prior to the agreement between Apple and the company being announced. Apple probably said, if you want this to go through, we need to know how your company is run and what's going on there.
And tell us about Phil Schiller, who they've chosen to be that observer.
Phil Schiller, his title is Apple Fellow. He's in charge of the App Store and Apple's product presentations, including the one where the OpenAI deal was announced in June at its Worldwide Developers Conference. He's been at Apple about 3 decades, very much a top lieutenant still to Tim Cook, and was one of the closest lieutenants and friends of Steve Jobs. He ran Apple's marketing organization for well over 20 years. He's known as one of the biggest defenders at the company of Apple's privacy stances, its product development process, its overall brand image. And given the concerns over different concerns from OpenAI and the safety with AI training, concerns about Sam Altman, concerns about their technology, concerns about ethics in artificial intelligence, concerns about hallucinations. It does make sense for someone like Schiller with that mindset to be the one in that board observer role, especially if they're looking for someone who's not from the AI side at Apple, who would be in direct competition with the AI side of OpenAI.
Yeah, some awkward moments where maybe you're having to be excused from certain board meetings when they really get into the nitty-gritty of AI. Mark, I'm interested in whether or not it is all about OpenAI for Apple now, because they were in talks with other providers for large language models.
Yeah, OpenAI, certainly they've said for a while, offers the best chatbot with ChatGPT. And that feature that OpenAI is integrated into, it's all about the chatbot, all about texting questions or voicing questions into Siri while using your iPhone, iPad, or Mac. And as I reported, that's going to come to the Apple Vision Pro as well as early as next year. But it doesn't stop at OpenAI. Apple's goal is to have an ecosystem of different chatbot providers that users can choose from, not dissimilar to how you can choose between Yahoo, Bing, Google, DuckDuckGo as your search engine in Safari or any other mobile platform. So they're still engaged in conversations with Google Gemini as an alternative to OpenAI for people who may want to use that platform. Obviously, that would be an extension of the Google search deal, so it would make sense that Google would get in there. The other company they've been talking to is Anthropic. They're also a big AI provider. One company that they're not talking to, and you should not expect to be integrated into Apple platforms, is Meta with Llama. That is something that is not happening. They had a brief conversation around February-March timeframe when we reported on the OpenAI and Gemini deal initially. But neither party moved to any sort of discussions or advanced negotiations. I would imagine there's going to be more providers down the road. Apple hinted at wanting some sort of specialized chatbots in there. For instance, maybe someone comes up with a chatbot that's all about food recipes. Maybe someone comes up with a chatbot that's all about medical terminology and medical information. Perhaps a doctor would want to use that during a doctor's visit. So there are many, many opportunities for more chatbots to be integrated into the OS. It's just to be seen how that integration is done and when it happens. I expect Google to be done before the end of the year.
An app store for AI chatbots. Mark Gurman, we thank you so much on all things OpenAI and Apple. Meanwhile, look, AI is everywhere, we know, and it's particularly in the world of venture capital. It would seem that venture deal making coming back, and it's all really thanks to artificial intelligence. Let's bring in Bloomberg's Katie Roof, who's deep within the VC team nowadays. And look, we're back when it comes to VC deal making, but it's very specific.
Right. It's got to be AI or one of the other hot categories like defense tech right now. Otherwise, it's really hard to raise money right now. I mean, if you look at the data, yes, we're up from where we were 2 years ago, but 2 years ago was practically .com bust 2.0. So we're back from dead, but you know, we're not back to normal or the ideal that many VCs are hoping for.
$55.6 billion was invested by US VCs, up about a half from a year earlier quarter, we understand. So this is all coming from PitchBook. Is this a global theme? Are we really thinking that, we just had Arvind on from Glean Nova based in India. Are we seeing US VC money back international AI stories?
Yeah, it's more or less the same theme throughout the world. The VC ecosystem's pretty interconnected. But yes, AI is exciting investors throughout the world, particularly the leading AI companies. They're getting lots of money, and that's partly what's skewing the data. And also you have companies like Elon Musk's xAI that raised $6 billion, which accounts for a sizable percentage of that. And so it's really that it's not that there are a large number of companies that are raising money. I think the data actually showed it was the lowest number since the second quarter of 2020. But it's that it's concentrated in the hot companies that investors are excited about.
Katie Roof, great to have you on the VC Beat with us. Thank you very much indeed. Meanwhile, let's stick with venture. Nick Storonsky, you know him, of course, for the last decade, shaking up banking with his financial services firm Revolut in the UK. Well, he's now looking to pull off a similar feat in venture capital. He's actually built a quantitative investment firm for early-stage companies called Quantum Light. It relies on algorithms, AI, over human input to source deals. And it's invested in almost a dozen startups in the past year after raising about $200 million. Meanwhile, coming up, we're going to be talking big business and the adoption of AI. Paul Hudson, CEO of Sanofi, is going to be discussing how he's integrating generative AI in the world of biopharma. That's next. This is Bloomberg Technology. Look, we've got to talk about the impact of generative AI in real life, across industries, biopharma being one of them. And I'm pleased to welcome to the show Paul Hudson, CEO of Sanofi, to discuss how your enormous French biopharma company has been leveraging the new technology in its operations. And yes, there's drug discovery, but also what's so interesting, Paul, is you're integrating it within the functionality of your business on a day-to-day basis.
Yeah, thank you, and it's a pleasure to be here. We're really trying to do incredible things for patients and discover new medicines. And, with AI being the great disruptor and all of the excitement last year, the wow of large language models, and this year for us is all about the how and how we can get our, the large amounts of our organization focused, whether you're in a lab doing expert AI, whether you're using generative AI in regulatory or text-driven parts of our business, and importantly, snackable AI, when we're looking at really trying to give better decision intelligence for almost everybody in the organization with the sole intent of becoming much more efficient and effective in delivering new medicines. It's amazing, really.
I love this snackable AI. You're using Play, it's a proprietary app, but I've got to ask, how have you thought about which underlying large language model you should look to, how you integrate this? Do you go to outsource? Do you build it from within, Paul?
Well, look, we're drug discoverers and developers. We're not coders at our heart. So we have this first of its kind relationship now with OpenAI, a partnership with Formation Bio, translating that for us to make sure that we can be customizing large language models to look at drug discovery, to try and drug undruggable diseases to this point. And we're doing things that have really never been done before. It's early days, but it's extremely promising. And remember, there's such a large amount of diseases that don't have medicines available for them because we simply have not had the computing power, the opportunity to deploy ourselves. And now, just now, we're at this next great revolution in science. It's such a privilege, actually, to lead a company at this point. As for Play, our sort of snackable approach, we partnered with a small startup out of Germany, Ailey. They've been working with us, they've grown with us, and that's, by the way, open for everybody. We don't own it, we're happy to share it. We want all boats to rise. We're in healthcare, after all. And so the more users, the more fun, the more accuracy, the more chance of discovering new medicines.
So how have your talent reacted? Because there's so much doom-mongering that AI is going to take all our jobs.
Well, I think our approach has been how to weaponize our people to do better. I don't know whether you're familiar with Waze, the driving app, but I see it very much like that. I got to get in the car, I got to start the engine and drive to the end of the street. And if Waze says I'm statistically more likely to have an easier journey turning left rather than turning right, I want that advice. That's crowdsourced large data real time. I want our people to feel they are amplified or multiplied in that event too. The goal is not about less people. The goal is about putting our people to be more effective and to have better decision intelligence. That in itself gives us a great opportunity to do something incredible. And we've only seen a huge appetite. That's why on any given day we have 18,000 people in our organization using the AI we make available. And I think that's pretty fantastic.
Let's talk about doing the amazing, the incredible, because we have just seen a push up in your share price on the day, and you've been reorientating this business of Sanofi and thinking about more R&D, about drug discovery and look, some costly cases in the way that you have to experiment, do clinical trials, but they've paid off today. And we think about the drug discovery when it comes to a key chronic lung disorder. Can you just tell us about what that means for the business?
Well, in Europe, just today, we got approval for chronic obstructive pulmonary disease, COPD, affects a huge number of people, third biggest killer. We're ready to go now in Europe to be able to provide an advanced therapy that'll reduce their chance of going to hospital by a third. And that's a breakthrough when there's been so little innovation. We aspire to be the world's leading immunology company, and that's partly driven by moments like that we live for in our industry, to do things that transform or protect patients' lives or prevent disease. You know, the reality is we're a very proud, huge, big company, but we wanted to be at the forefront of science again. And we've made some big bets, but appropriately so, to try and make sure our science is some of the most exciting and it's first in class or best in class. And to couple it with our conversation of earlier, the more we add AI, the more we improve our decision intelligence, the more opportunity we have to do more in that space. And I think that's what's catching the excitement in our organization. And we believe we're quite far ahead. I mean, of course, we're very responsible about how we use AI, but others are still hesitating. We're taking our moment.
But sometimes you need good data to feed in to these large language models, Paul. What about the data on viruses such as, well, bird flu at the moment here in the UK and the US, indeed? Look, there is a worry that the data isn't being good enough in the United States. Is that something that worries you when you need to be developing a new vaccine for that?
Look, I mean, we've been through one pandemic. I think we've learned a great deal about trying to have the best data. And I think we position ourselves to take advantage of those opportunities on behalf of society. Frankly, we played a small part in COVID, but we stand ready should we be asked. The data and its legitimacy, you know, we often that data comes in through government channels, through health systems, you know, and we work at real-time speed to make sure that we have the very best data available. In terms of large language models and the rest of the data sets, you know, we collaborate far and wide. We have partnerships with Okin, with Atomwise, with Exscientia. We really are trying to make sure that we have at our fingertips huge data sets to mean our accuracy and our predictive capability is far ahead of the competition. We won't get it right everywhere, but the data and its integrity are the absolute fundamental starting place. Our relationship with OpenAI and with Formation Bio, we're putting our own data at play to make sure that they can learn from it too. Again, all boats should rise. We're in healthcare to do good.
You're also selling off bits of healthcare because you're focusing in on the R&D, the drug side, and maybe the consumer business goes for a hefty price tag. You've been thinking about IPOing, you've been thinking about a sale. How is that process going, Paul?
Well, we announced last October that we were going to become a pure play biopharma. You know, we want to double down on the things we just talked about. And we have an incredibly successful and energized consumer business. We feel, and they feel, in fact, that they can stand better on their own 2 feet and be independent, raise their own capital, take on their own projects. And we want to support them in that. It's the right thing to do. Our capital should be allocated towards discovering new medicines, and theirs should be about growing their business faster than the market, which, by the way, they're doing very successfully. We've declared that by as early as Q4 24, we'll be ready to go to separate that business. We haven't shared how we will do it, but I think it's quite well known that you know, we're talking to interesting parties, certainly PE, and we have the capital markets vehicles available to us too. So no, we're excited for them. There's a huge amount of interest. It's a great business, and we hope to create value for patients, for stakeholders, and indeed for the people in the business.
Q4 24 is pretty notable, given that we're in quite a politically uncertain time. Look, we two Brits sit here looking that there's going to be an election and people voting in the UK tomorrow. And then, of course, this weekend is all important for France. How, as a leader of such a French giant, are you feeling about the political risk of doing a deal in this market?
Well, look, in terms of healthcare and being a leader of an incredibly important French company, our first priority is to ensure that whoever governs, they provide a predictable, stable environment, because research is a 10, 15-year process. So, we need to think long term. We hope that whoever leads the country will think long term. We know the current government has been incredibly supportive of innovation and creating that ecosystem. We hope that that would continue. Of course, there are people trying to understand what it means for the economy, much like for the change in government, if it's to come about in the UK. And people want that predictability in the markets too. We're a long-term player trying to do the right things for patients, trying to drug the undruggable. And we hope to partner with whoever's in power, of course, because we have to be ready to do our part for society. And so far, we believe that can continue.
Paul, it's been great talking to you. The intersection of drug discovery, of artificial intelligence, snackable AI, as you call it. Paul Hudson, great to have some time, CEO of Sanofi. Stay well. Meanwhile, coming up, it's been 1 year since the launch of Meta's Threads app. A year already. We'll discuss that next. This is Bloomberg Technology. Can you believe it? Today marks 1 year of the existence of Meta's Threads app, in a bid, of course, at the time to capitalize on the struggles of Elon Musk's platform X. Remember those cage fights and the talk of that? Well, 1 year in, Threads may soon compete with X, actually for advertising dollars as well. Let's discuss all of this with Bloomberg's Kurt Wagner. And well, what was notable about Threads is there wasn't advertising, and there still isn't. But will there be? Will that tap be turned on soon?
Yeah, that's the plan. I had a conversation with Adam Mosseri, who runs Instagram. Instagram oversees Threads. And, he said they want to do ads sooner rather than later, right? And that's a big deal if you are X, because Meta's ad system is just so much more advanced. Advertisers are already used to spending on Facebook and Reels and Instagram. And if you add, Threads into the mix, I really do think that could be the kind of thing that takes, money away from X, which is already struggling, as you know.
What does Adam and the team at Meta really sort of admitted to and learned? Because it was a fascinating launch. Threads sort of was almost iterated on and built while we all played with it. There was talk of decentralization. What has actually occurred with the product?
Yeah, I mean, they have moved quickly. There are some good things that they've done in the first year. They did launch an API recently. They've sort of came out with this like TweetDeck-like feature so that you could have multiple columns of feeds at one time. But where I think they've really struggled is to figure out, like, what is the point of Threads? What's the purpose, right? I think Twitter, before Elon got there, we knew what it was. It was the place you went for breaking news, and that was the specialty. I don't think Threads has a specialty right now, and it's kind of been reluctant to lean into breaking news in the way Twitter did. And so I worry for them, if they're not great at one thing, what do they become?
And to that point, will that put off advertising, or was there a threshold that Adam felt had been hit that then meant, okay, we're good to go, we can lean into turning on the money now?
Well, I think the benefit they have on the advertising front is that people are familiar with their ad systems, right? So you could go and you could put money in, and you could just take a little sliver of that money and say, hey, send this over to Threads, right? Like, you don't have to, if you're an advertiser, learn something brand new, which I think is a huge advantage for them. It'll be interesting to see if advertisers think Threads is relevant enough for their ad dollars. But for now, I think it's a very interesting thing that people will eventually want to test out when they do choose to turn the ads on.
It's meant to be a nicer place to play, and I know, Kurt Wagner, you're out there on Threads putting out some posts, so go check him out there. We love you for your work. Thank you for coming on. Meanwhile, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. Meanwhile, we wish you a very happy July 4th tomorrow. But tune in if you want to catch me. I'm still on. This is Bloomberg Technology.